Welcome to my channel, people. This is Jatin from Green Bulls Academy, and in this video, we will be talking about primary market. Primary market, in bookish terms, is the vital part of capital market which deals with the issues of new securities. In primary market, there are actually two main players. One is the company, that is the security issuer, and the second one are the investors. Investors could be foreign investors, they could be domestic investors, or they could be retailers like you and me. So to understand primary market at the fullest, I will be first talking about the company. So the first question that comes in our mind is why a company wants to enter primary market. I have told the answer in the prior videos as well, but I will be doing that again. So let's say a company, ABC company, has been working for 5 to 10 years, 5 to 6 years, and it has generated a lot of money. But now it wants to expand its business. It wants to do a business on a great level, on a big level. So what they will do, they will come to public and say, okay, or they will come to investors and they will say, please provide us money. You will invest money in a company, and we will try our best to generate a lot of income so that you will be benefited and our company would also be benefited. So this is the main goal of a company, which is by raising fund they want to enter the primary market. So uh, raising fund is not an easy task. There are the two major ways in which a company can raise funds. One is the preferential issue, and the second one is the public issue. In a preferential issue, what actually happens, a company tells a specific person, usually a big business tycoon or a big investor, that's please, we want you to invest in a company. They will, the company executives, they will go for a specified pitch deck. They will tell why, what are we doing, what are the product, how we want to scale our business, and how we will be able to benefit from the money that the investor will be providing us. So they do that. If the investor is willing to invest, they get the fund and then they start working. The second issue, the most important, is the public issue. A public issue has two important legs. One is the initial public offering, and the second one is the further public offering. Initial public offering, it actually happens before the company is being listed on the stock exchange. On the other hand, if I talk about further public offering, it happens once the company has been listed on stock exchange, but they're again in need of money, which could only be generated by the public itself. Sorry. So first of all, we'll talk about IPO. The system of IPO is quite simple. What actually happens, a company gets permission from the SEBI, as Securities Exchange Board of India, that they want to go for an IPO. Once they get the permission, they would be able to do the process of an IPO. In an IPO, there are three important things you have to look for. The first is the price range or the specified price. In an IPO, there are two ways in which securities could be issued to a retailer or the investor. The first one is book building issue, and the second one is a simple issue. I will be talking about book building issue and specific book building issue in another video, because it has a lot of contents. There is a lot of information you have to understand. At this point of time, I don't think you would be able to understand, because we'll deviate from the main topic. So the first thing and the most important thing you have to understand while you are looking at an IPO is the price range. Okay. The second most important thing that you should know while you are looking for an IPO is the lot size. Now, what is the lot size? Every single time a company goes public, it defines a specified lot size. A lot size is actually the minimum amount of quantity of shares that you have to hold. For SBI card, which happened in March to 2020, the minimum lot size was 19, which it means that if you want to invest in that IPO, you actually need to invest the amount which will cover 19 shares, at least 19 shares, and the multiples of that. So, like, let's say if you had more money, you could go for 38 or 67 and so on. That is how it goes. Two things I have done. And the third most important factor that you have to look for whenever you're looking at an IPO is the fundamentals of the company or the vision of the company. Can you think a company which doesn't have a good product would be able to provide you income in after 10 years if you have invested in it? No, it couldn't happen. Or when there's no market for that product, do you think? No, it cannot provide returns. But just think of it, a company which has been working hard and is actually working, or you can say running ahead of its time, that could actually generate income for you. This has happened for so many companies. It has happened for Wipro, it has happened for Infosys, and it has actually happened for IRCTC as well. Let me give an example of IRCTC. The listing of not listing, the price band which was issued for the IPO was around 230 to 40. No, not 230 to 40, 320. And it, when after it was listed, it went up to 2000 in just 1 month, which means if you would have invested some amount, the minimum amount was actually around 13,000 rupees. If you would have invested 13,000 rupees, it turned into nearly 95,000 in just 1 month. This is why people are so enthusiastic about IPOs or initial public offering. But understand one thing, not every single IPO does that. As far as I am concerned, as far as I have seen, I started seeing markets, IRCTC has been the best IPO or the best income generation machine when it comes to, in terms of primary market. Okay, but it happened. Why does it happen? First one, the most important factor, the fundamentals. IRCTC doesn't have any any rival. There's only one company that isn't doing business. There's only one company which can do business of railways in India, that is IRCTC. Secondly, it has food business as well, very organized, extremely organized food business. So it has a lot of income streams actually, and that is why the share went up. A lot of demand. So this is how you have to see about IPO. This was a simple, very fine example. Then I'll be talking about IPO. Well, let's say you want to apply for an IPO. What you will do? The IPO opens. There are actually the at least the minimum amount of time that the IPO will stay open is 3 days. So what actually happens? The market opens for an IPO from 9:15 and it goes till 5 p.m. So in between that, what you have to do, if you want to apply for an IPO, you need to have two essential things. One is the depository number, which will be provided to you from the broker through which you open the demat account, and the second one is PAN number. So if you have these two things, you will be able to buy securities. Okay, what you have to do, you have to go to the site, or you have to go to the broker or the site of the company, and then you can fill out the form. You have to just fill out the depository number, and this is how it goes. So this was a brief description about IPOs, what actually are IPOs, or what is the primary market. I'll be talking about book building issue in my coming videos, but before that, I want to talk about secondary market, the hottest market of all time, and how people are able to make lots of money in that in this market. So I believe you were able to get some information from my video, and if you liked it, do subscribe, do like my video, and do share it. Thank you for watching.